We've got Rajiv Kaul, Executive VC, Whole-Time Director at CMS Info Systems, which came out with their numbers, also joining us. Rajiv, thank you very much for your time. First of all, let's understand there was a sequential improvement of almost 4% and yearly improvement of almost 17% in terms of your top line. How's the business shaping up? What's the current market share in the cash management side, and what's the guidance for growth the rest of the year?
So we've had a stellar year. FY23, our overall business has grown at 20% revenue. FY22, we had grown 21% revenue. Cash management, which is the cash logistics business, which is almost 2/3 of our revenue, has grown at 17%. Our revenue market share, we estimate in the sector to be close to 40%, even though right now we don't know all the numbers finally for all the companies, but our estimate is around 40%. From a guidance perspective, we had a pre-IPO shared our plans that as a company, we will double our revenue from FY21 to FY25, which is sort of going from 1,300 crores to roughly 2,600 crores. So our target for FY25 remains in the range of 2,500 to 2,700 crores, and we reiterate that guidance.
Rajiv, we've also observed that your margins have expanded by almost 100 basis points. And this, despite the fact that vehicle costs as well as fuel have an upward bias. Talk to us about what are the factors behind this margin expansion, and what's the outlook on margins going forward?
So, we don't give margin guidances. However, having said that, if you look at our margins for the entire year for a fiscal year 23 with an EBITDA margin of almost 28.6%, these are world-class margins. Even in business services companies in India, nobody has a margin profile like this. Our reason for expansion in margins, if you think, is 100 basis points sequentially, but on a year-on-year basis, almost 300 bips. In an inflationary environment, there are a couple of reasons. One, we have used a lot of automation to, drive, use technology in our route logistics business to drive operating leverage. Number two, our business mix from managed services and the new business we launched on AI remote monitoring business, I think at a higher margin profile, that mix also helps us overall deliver a much stronger EBITDA margin in the business.
Right. Rajiv, also talk to us about how exactly do you witness, this entire 2,000 rupee note exchange matter impacting your business? There was concern around it. It did not pan out to be as big a worry. In fact, it was not demonetization. It was actually a replacement of the note which RBI had announced. How do you think cash management and cash transactions would actually happen in that light, and how will it impact your business?
So right now it's too early, right? I think there will be some clarity, and we'll have to see trends. We do forecast more retail spend, where 2,000 rupee notes may be used in retail consumption. From the ATM channel, if I think of it, right, CMS manages more than 72,000 ATMs, which is 25% of India's network. The less than 5% of those ATMs were configured to dispense, let's say, a 2,000 rupee note. So I don't, from a dispensation perspective, 2,000 was used so much. But for consumption, of course, like everybody wants to carry lesser number of notes. In the short term, I do perceive that it may balance out. There may be more retail consumption, but if people are using savings, instead of going to withdraw money from a bank account or ATM, that transactions may come down in the short term. But in the mid to longer term, I do think that intensity of cash usage, because you will need to use more currency notes to transact when you do cash. It could be, I would say at this point, a safer decision will be a mild positive. But again, it's too early to sort of be able to judge how this will go.
All right. Thank you very much, Rajiv, for joining us on the show today.